Today, on the bottom line, investors worry over rising costs at Google, Elon Musk and Mark Zuckerberg fight over the future of AI, and longtime tech analyst Gene Munster says bet on Tesla. Hello, welcome to The Bottom Line, presented by Fidelity Investments. I'm Sarah Silverstein, in for Henry Blodget. We are here at the NASDAQ market site overlooking Times Square. This week, Google's parent company Alphabet reported earnings after the close on Monday, and despite that they beat on the top and the bottom line, the stock fell 3.5% by the close the next day. The big concern was rising costs at Google, specifically traffic acquisition costs, the fees that they're paying to their partners to drive traffic to Google, which is where a lot of their growth comes from. CFO Ruth Porat said the company expects traffic acquisition costs to continue to increase, putting pressure on margins, and she also said the company is more focused on total profits than on growing margins. Google is one example of big market reactions to earnings results, which we've seen across all stocks. Goldman put out a report recently showing that earnings day moves for stocks is about 4 times the average daily move, which is the highest that it's been in 18 years. And this is even more pronounced in the tech sector, where the FAMG stocks, Facebook, Apple, Amazon, Microsoft, and Google, are getting 50% of their earnings, of their gains in a quarter in the week of earnings. And for the tech sector at large, 40% of their gains in a quarter are coming during that earnings week. And here's today's Fidelity Insight.
So Google reported this week. Looked like a spectacular quarter, yet the stock trades off. Why did it trade off, and what is the outlook from here?
You know, Google, I think, is at the intersection of a lot of important trends taking place in the digital economy right now. They obviously are the leading search engine, but believe it or not, they actually own the #2 search engine in the world as well, which is YouTube. And then they're also a leader in artificial intelligence. They have the Android mobile operating system. So Google is really, in my view, at the heart of a lot of positive trends taking place. In terms of what I try to do is really focus on the long term and really look at what the opportunity is. And when you look at the opportunity in their core business, advertising business, the global advertising business is about a $500 billion market. And they're really scratching the surface in terms of how much time. If you look at how people are spending time today, it's way different than how we spent time growing up in terms of consuming media. Most time, over half the time people are spending consuming media is now on digital devices. And there's still a wide gap in terms of how ad dollars spent. I started out as a media analyst here at Fidelity, and one of the first things I learned was ad dollars follow eyeballs, and that's really what we're seeing here, and we're really at the early stages of that. Short term, in terms of what happened this past quarter, I think it's a simple game of expectations, where I think even though Google beat consensus expectations, I think internally, investors were hoping for more. The stocks had a nice run this year. So I just look at it as an opportunity where you have opportunities to buy stocks when they come down. But I think long term, the outlook still looks very strong.
And you say they're scratching the surface. It's a huge company now with $100 billion of advertising revenue, really, and the $500 billion market you're talking about. How big can one company get in terms of global advertising? When do you start to become concerned? Okay, we're hitting the era where we're going to have law of diminishing returns.
Yeah, no, that's a great question. So one of the things Google's been great at is really going into adjacencies. So, the core advertising, as I mentioned, is a $500 billion market, but they're also the leader in what I call machine learning, or AI. Automated cars. There's estimates out there that self-driving could be worth another $50 to $100 billion in market cap for Google itself. And so they've done a great job of going into these adjacencies. And so when I look at overall, there's still a huge gap in terms of time spent and ad dollars. And the other thing is that $500 billion number doesn't include all the direct marketing dollars that are spent out there. So they're actually taking share.
What search is.
Exactly. And so they're actually taking share of other pieces of the pie that aren't in that $500 billion market. So I feel comfortable that there's still a long runway for growth there.
This week's bottom line is artificial intelligence. Elon Musk and Mark Zuckerberg are having a very public debate about whether artificial intelligence is good or bad. Elon Musk in 2014 started spreading the word that he thought that artificial intelligence could be very dangerous for us, calling it the largest existential threat to humans. Mark Zuckerberg on Sunday was in a Facebook Live interview and responded to some of these concerns by saying, I think that people who are naysayers and kind of try to drum up these doomsday scenarios, I just don't understand it. I think it's really negative, and in some ways, I actually think it is pretty irresponsible. Elon Musk responded on Twitter on Tuesday saying, I've talked to Mark about this. His understanding of the subject is limited. Ouch. They may both disagree on whether artificial intelligence will end up looking like Terminator or the movie Her, but what they both seem to agree on is that it will affect income and the labor markets. Mark Zuckerberg during his Harvard commencement speech brought up universal basic income and his support for it, saying that it's something that we're going to need as jobs are taken away. And Elon Musk has said in a CNBC interview that he almost seems to think it's inevitable that we will need something like that, saying there's a pretty good chance we end up with a universal basic income or something like that due to automation. Whether you think AI is going to exponentially improve our lives and our output, or you think that it could be the destruction of all humanity, both sides, Musk and Zuckerberg, agree that it will disrupt the labor force and that some sort of solution is inevitable. And that's the bottom line. Earlier, I spoke to everyone's favorite Apple analyst, Gene Munster. Here's what he had to say. I'm here with Gene Munster, founding partner of Loop Ventures, a venture capital fund. We all know Gene from the 20 years you spent at Piper Jaffray as one of the star Apple analysts in the world. To get started, I'd like to talk to you a little bit about Google, who just reported earnings this week. What did you think about that?
Everything was great, especially the revenue growth. Plus 21% was consistent over the past 5 years. And so I think there's always been this narrative that Google revenue growth was going to slow, and it just hasn't happened. It almost performs more like a SaaS story than it does like a search company. And the big nick on it was the cost per click. Essentially, they're making less money per click, which kind of scared investors, and so that's why it traded off. So I think if you look at this holistically, there's a lot of good things going on, not to mention all the other stuff that they're doing around frontier tech, specifically around AI, that is, I think, going to be exciting for investors over the long haul.
Do you think that the stock market overreacted on the negative side to the earnings, or do you think that investors are being too short-term thinking and that long-term things look a lot better?
Definitely too short-term thinking, and I think if you put this into perspective, Google really is the oxygen of the internet. We've known that for a long time. But what they're doing around AI, their CEO has said for the last 3 calls, opening remarks have been that AI is their North Star. And that is going to fundamentally change every company, but Google has a more unique play around AI. And so what that means for consumers longer term and investors is that users of Google will get the better results with fewer blue links, and advertisers are going to be able to advertise on Google and pay less and get a better ROI. And so I think that when you think about that, those pieces and what they're doing, the stock reaction this week was an overreaction.
And your new venture, you're focusing a lot on artificial intelligence. Where do you think the best opportunities, what companies will be best positioned to take advantage of AI?
I think Google, Amazon, Apple, I think those are probably the 3. Facebook is trying to nestle their way in there too. But those really, the iron horse internet companies are spending a ton of money. If we look at their budgets this year, it's going to be around $3 billion that they're going to be spending on some of this frontier tech. And so about 10% of those companies' budgets is spent on this. And so that's why we think that they're going to be leaders in this space.
Great. And there was a little bit of an argument between Musk and Zuckerberg this week about artificial intelligence. Musk thinks that it's very dangerous and it's going to be like the downfall of humanity, where Zuckerberg is very optimistic. Where do you fall, Team Musk or Team Zuck?
Team Zuck, I think that there is more good that can come out of this. There clearly is risk to AI, and I think that we don't fully understand what the implications are here. Let me just put it into some quick context. Is computers can think about as well as a worm can today, but in the next 20 years, they should be at parallel with humans. And at that point, there should be exponential intelligence growth. And so you think 30 years from now, computers will be infinitely smarter than humans. And that is what I think scares some people. But at the end of the day, I'm just a believer in humanity and the good of humanity, and there'll be the proper restrictions put in place. We're not going to have a situation where machines are going to be like Terminator and blowing things up. That's simply not going to happen. The way that it happens in a malicious way is that these computers potentially could take over the banking systems and power grids and things like that. So I want people to be aware of kind of what the context of the risk is here.
Great. And Tesla's coming out. They're giving their first Model 3s out at the end of this week, so the first 30. And you're pretty bullish on Tesla. You think the Tesla Model 3 is launch as big as the iPhone, right?
Absolutely. I think Tesla is going to be the most exciting story to watch over the next 5 years. And this is a polarizing story, and there are people who are considered the cult camp and the non-believers. And I'm in a believing camp here. But we think it's going to take a little bit longer than most people think, probably a couple years longer to really hit that inflection point. But we think what Tesla is going to do is going to be even bigger than what most people think. And just to put it in a context, is Tesla is really being a pioneer around electric vehicles. But every car that's made today will be fully autonomous in 2 years. And so whether or not legislators are going to allow that is another question. But when you put that combination together, is EV autonomous and more affordable than people think, then you get to this paradigm shift that can be as dramatic as the iPhone was when it changed a phone to a computer in your pocket.
And you guys did some research about how affordable electric vehicle of a Tesla is compared to cars that most people own.
Exactly. We went and looked at a Toyota Camry, just basically your standard issue car here in the US, and we found that Model 3, the average price is going to be about 42% higher than a Toyota Camry. But when you look at the total cost of ownership over a 5-year period, which factors in savings around insurance, fuel, and repairs, that gap narrows to 14%. But these cars are infinitely different cars too. And I would just point out that once, I don't own a Tesla, I've driven in a Tesla, but once you have a Tesla, it's hard to go back.
And for 14% more.
14% more, yep.
So Apple, you're big on Apple. What do you think about what we're hearing about the iPhone coming out, it coming out later, or about it being $1,000? How do you think that'll affect Apple?
I think both of those are going to happen. It's probably going to slip a month. They're still going to announce it most likely in September like they always do. It really doesn't impact much beyond there's some adjustments that analysts need to make to their numbers. It doesn't change the broader story. I do think investors are going to be progressively more concerned about what the tail of the next iPhone is going to be. That's natural that they get excited about a cycle going into it. We saw that in this 50% move higher in the stock over the past year. But as we get into the launch, I think you're going to see some skittishness amongst investors. The big picture is this, is Apple has 1,000 monthly active iOS users. And Google came out with a number this week that they have 2 billion Android users. And so that number is actually closer, those two numbers, than what I would have thought. And so that piece of it is what really drives their services growth and I think really builds an opportunity for this, despite some of the near-term fluctuations in the stock, to be just a core holding for tech investors.
And 3 years ago, you and I spoke about Apple TV. You told me to wait and not buy a new TV, and so I haven't, and it's causing some problems for me at home. So I'm still waiting.
I can imagine, and I am sadly here to report that you can purchase that another brand TV. Maybe I can put you in touch with someone at Amazon who can help you out. This has been really a rough story for me, just thinking that Apple was going to do a TV, and in fact, it just never happened. And there was some lessons that I learned from that too, and particularly as we think about new product categories that Apple potentially could get into, including wearables around AR, which we do think that they're going to do. But the car piece separately is something that we're not willing to make a bet on. And part of that is some of the lessons we've learned about from Apple TV.
And you do think that Apple glasses could be the future? You think if they do wearables that they could be the winner in wearables?
They'll be one of the winners, and I think that they just acquired a company to help them do that. It's an eye tracking company based out of Germany. The reason why you have eye tracking expertise is to build some form of a wearable. So our best guess is 2019 that we're going to see some wearable. Think of this as Google Glass that you'd actually want to use. But the idea is that Apple's making a huge bet around augmented reality. And they really laid the law down with this AR kit that they recently came out with. But the phone is going to be the device of choice over the next few years. But eventually that's going to migrate to some form of a wearable. And the most natural thing and most convenient thing for people is going to be glasses. And just one final thought, the reason why that's important is how we're going to be interfacing with machines in the future is going to be different than it's today. Today we're using a touchscreen or a keyboard. In the future it's going to be a gesture. It will be an eye movement, or, and this is where it gets really fun, is your thoughts. And brain tech is going to be a big piece of this too.
And where do you think Apple's going? Where is it headed?
I think the story is near term, as we talked about, might be a little bit dicey. Long term, I think it's going to be more of a services play. I think they're going to try to build something out around the car, whether it's working with existing car manufacturers or doing something on their own. And so I think that the company is moving in a great direction.
Do you have a favorite tech stock?
If you're going to say what's one story to own, it would be Tesla. And I just want to warn people that this is going to be a really wild ride here. And the stock has big trades based on production comments that they have and timing of different products. But I think if you step back and think about what's going to happen in transportation, this is going to be an incredible change in the next 10 years. And as we think about the next 10 years, I don't want you to think about the last 10 years, what's happened over the last 10 years, but this accelerating returns on tech. It means that in the next 10 years, we might see 20 or 30 years of innovation. And so when we think about Tesla and what they want to do around transportation, we like to think about a traditional car as a horse and buggy. And some people love to drive their cars, and they'll have a chance to go to a track probably and do that. But eventually, we're going to all have autonomous cars, probably earlier than you think.
Great. And last question, just generally, a lot of people are talking about tech valuations. Is this another tech bubble? Where do you stand on that?
I don't think it is, and I was an analyst through the bubble. I think the biggest difference here is that there's actual real businesses that these companies can rely on. Each of them has a real business, and they're investing aggressively in future tech. Back in the bubble, it was all in the future, and so I don't see this as a bubble. There'll be natural pullbacks, but I don't see this as a bubble.
Great. Thank you so much. Thank you for coming
Sarah.
in. That's it for this week. Thank you so much for joining us. Thanks to Gene Munster for coming in. A big thank you to Fidelity Investments for making the show possible. And of course, thank you to NASDAQ for hosting us.